stocks reversed direction today and closed lower. Are investors turning cautious ahead of the Thanksgiving holiday? Larry Kudlow says it's the greatest story never told, but the question, will it continue? Let's bring in our guests. Joining us now is Art Hogan. He's managing director at Jefferies, and Peter Schiff, president of Euro Pacific Capital. Art, let me start with you. They can't go up every day, right?
Well, I guess they can't, trees don't grow to the sky, but we certainly have had a nice run. If you go back to July when this market bottomed out, and the forces that were in place then, the tailwinds in this marketplace remain with us. I'd say they're threefold. I certainly think that lower energy prices, and we've seen more of that this week, were one of the drivers. I certainly think the Fed getting out of the way, a friendly Fed, the Fed on the sidelines has certainly helped, and the economic data stream has continued to play that out, that scenario out. But at the bottom line, the fundamentals of corporate America, the earnings picture is good. It's better than we expected. We just had a third quarter, better than expected. Estimates for the fourth quarter going higher. So I clearly think that, the real drivers behind this market continue to be with us.
You heard Art, lower energy prices, Fed on hold, strong corporate earnings. What's not to like, Peter?
Well, there's a lot to like, but I think the market's going up now mainly because people are chasing it. There's liquidity there, but I think the people buying U.S. stocks are underestimating several things. They're underestimating just how bad the recession is going to be, that I think is going to start next year. They're underestimating just how badly that's going to impact corporate earnings, and they're also underestimating how high interest rates and inflation are going to go, despite the fact that we're in a recession. Bring up
this Dow chart again for me, guys, would you? Are you short this market? Have you been short? I mean, this has got to be painful.
No, I'm not. I haven't been the U.S. market for the last 6 or 7 years, and we're making a lot of money with that strategy. Remember, the Dow is underperforming just about every other market in the world, and it's underperforming every other commodity in the world. I mean, priced in gold, the Dow is down more than 50% from where it was 7 years ago. Just to keep it even with the CPI, the Dow would have to be over 14,000 now. So rather than being short U.S. assets, I'm long foreign assets, commodities, and gold, and we're making a lot more money that way.
Art, what do you make of that argument? Everywhere but here.
Well, everywhere but here has probably worked over the last couple of years. I don't know that that's going to work, and I would certainly, sort of put it to you, what's going to cause the recession next year that, everyone seems to be predicting, and it has been wrong for the last 2 years. Don't you think gold's played out here? As a commodity, we've sort of seen that play out, and I think that, it's interesting that you go through a 20-year period where gold is underperforming, you get a 2-year period where gold is outperformed, and every gold bug comes out of the woodwork and wants to tell you how you should own gold and not Google, and I'm not sure I can rationalize that decision.
Remember, gold was in a bear market for 20 years. Stocks were in a bull market for 20 years. That's changed, and people have to understand that, or they're going to lose a lot of money. The gold rally, I think, is still early on. I don't know, do you own any gold yet, Art?
No, just my wedding ring.
All right, well, you see, let me know when you got some.
Okay.
But,
that'll be the peak.
It's still, he might not buy the exact peak. Do you own any gold yet?
No, we're not allowed to own.
I came on this show, I think, about a year ago, and I mentioned gold, and Mark Haynes was on Squawk Box, and he said, who cares about the price of gold? And I said, well, tell me when you care. But it keeps going up. Stocks, this is not a bull market anymore. And if you want to know what's going to cause this recession, look at the home market. You're going to see housing prices down dramatically in the next year. The reason we've had this economy, our economy has been based on consumer spending. GDP is 70% consumer spending. Where are consumers getting that money? They're borrowing against the equity in their homes. And not only is the equity in their home going to disappear, but the cost of those adjustable rate mortgages, which are all going to reset over the next year or two, are going to go through the roof.
We've heard that argument a lot. Art, go ahead.
I'm just going to say, we've heard that argument for years now, and consumers don't just spend the equity that's in their home. Consumers spend when they have wages. We have a very high level of employment. We've got a very low level of interest rate. And right now what's happening is, again, we have to be nervous about a real estate market that's a bubble that's going to burst.
Right, but remember where those wages are coming from and all that employment. It's coming from discretionary spending. And as interest rates rise and home equity goes away, when consumers can't spend, people lose their jobs. You forget how interrelated the housing market is to the economy, and not only the actual market itself, but all the extra consumption that has been financed by temporarily low interest rates and home equity extractions.
All right, Art, Pete has made clear exactly what he's investing in. He likes overseas stocks. He likes gold here. What do you like if you're bullish on the economy?
Well, right now there's a couple things we like. We like, I would say, two things, and they're very easy, Michelle. Right now, this is the time of year you look at technology, because technology is going to actually have its sort of best quarter. Historically, the calendar is very good for software companies. There's a great deal of consolidation going on right now. For the Christmas season, we have all technology companies sort of roll out their best products. So it's really the parade of consumer electronics. You've seen what's happened with PS3. That's true throughout the entire food chain, whether it's a cell phone or an MP3 player or a flat screen digital TV.
And quickly, idea number 2.
Energy stocks, they've been oversold here. You know, obviously the supply and demand hasn't changed globally for energy, and it's not going to change. You had a precipitous fall off in energy prices. It doesn't mean these guys aren't making money. So look at energy stocks.
We found something we agree on, energy. I've been buying energy stocks for 6 or 7 years. I agree it's a pullback. Oil's going to $150 a barrel, and, you know, this is a pullback to buy, you know.
Gentlemen, thank you. We appreciate all the ideas. Art Hogan and Peter Schiff. Good to see you. Coming up next, it's Monday.